Hi, I'm Lou from Dividends Dog. Welcome. Here we look at stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing to our channel. So today we're going to talk about the Kroger Company. We'll do a quick overview and talk about some of the pros and cons of this particular stock. Kroger is the second largest U.S. supermarket chain. And at the moment, they're trying to buy Albertsons, which is the fourth largest U.S. supermarket chain. So let's go into the history of the Kroger Company. It was started in 1883 in Cincinnati, Ohio. In 1983, they bought Dillon's, which brought on not only Dillon's, but also King Soopers, Fry's, City Market, and Gerb's. 1999, they merged with Fred Meyer. That's the owner of Smith's, Ralph's, Food for Less, and QFC in a $13 billion deal. They also merged with JC, Owens Market, and Payless. 2001, they merged with Baker's. 2014, they merged with Harris Teeter, and also Vitacost.com. That's one of these pure e-commerce companies in the nutrition and healthy living market. 2015, they merged with Roundy's, Pick and Save, Metro Markets, and Mariano's. 2018, they merged with Home Chef, and they partnered with Ocado. That was to revolutionize the home grocery delivery. Also in 2018, they sold off their convenience store business, which was 762 locations. And now, as of yesterday, October 14th of 2022, they're trying to buy Albertsons, and we'll look briefly at that. Albertsons includes its namesake as well as Safeway, Vons, Jewel Osco, and Acme. So they've done a lot of acquisitions. They've already grown their business quite a bit. Albertsons is another large company, and they've just announced just yesterday that this is going to be a $24 billion deal to try to buy up Albertsons. So let's look at the financial aspects of these. We'll look at both companies just in brief. So we see Kroger with their approximate 2,750 supermarkets, and Kroger has been doing well on their own. The earnings per share are up pretty significantly considering it's a supermarket. The dividends are growing. Still the amount of dividends they're paying is still quite low versus the earnings per share that they're producing. So the dividends to profit is pretty good because it's so low. It has some room to run. They have a total debt of $13.2 billion. Albertson, we'll have to look at that because they're the acquisition target. With their approximate 2,300 supermarkets, it has fairly good earnings, but they only did an IPO back in June of 2020, so we don't have a lot of information on them as a public company yet. Albertsons has total debt of $7.9 billion. And if we look at these, we look at all these numbers and the dividends and the earnings per share. We can look also at ratings to see how these companies are rated. Kroger has an A rating by Value Line. Albertson has a B plus rating from Value Line. Morningstar rates Kroger as having a narrow moat, negative outlook, with a fair value of $49.50 a share. Morningstar rates Albertson as having no moat, with a negative outlook, with a fair value of $28.50 a share. And I did some digging here. S&P, they rate Kroger at triple B with a stable outlook. That was from July of 2021. And S&P rates Albertsons debt at double B with a stable outlook. That's in April of 2022. I looked at Moody's. Moody's rates Kroger at Baa1 negative, and Moody's rates Albertson as a Ba2, and it's noted that they may upgrade Albertson if they're acquired by Kroger. So basically, Kroger is getting an investment grade rating. Albertson has a speculative rating or a junk bond rating from these rating agencies. Looking at the insiders and insider trading in relations here, I see some sales when I look through this here. A lot of them are just sales and the offices are using their options and they're exercising the options and they're selling the shares. I don't see a whole lot of actual buying here. I see mostly option exercising. I see some outright sales. It's interesting to note that Berkshire Hathaway owns over 61 million shares of Kroger stock. That's Warren Buffett's company. So Warren Buffett and Berkshire Hathaway, they own 8.4% of Kroger stock. That's per the 2022 Kroger proxy. So get into some pros here. I think the biggest pro with this stock as far as being a catalyst is if the merger takes place, it would give Kroger a much bigger footprint, much bigger buying power. When I look through the Morningstar, there's a note that talks about how if this goes through, it would strengthen their narrow economic moat that they give it, even though Albertson itself doesn't have a moat on their own. The bigger size, the bigger scale, might compete better against both the market leader, Walmart, and some of the other smaller players in this area. So I think that's probably the biggest pro. This merger, if it goes through, it could be a catalyst for Kroger. I think the cons, if the merger goes through, I think there's risks here of integrating this big purchase. On one hand, Kroger, this is very much their business model, that they have this history of buying all these other chains, and they've done quite a good job of bringing them all together under their big umbrella, and they've done well with that. Albertsons is different, though, in the sense of its size here. You're taking on a company that's almost as big as Kroger is. So I think if a merger doesn't happen, it's going to hurt Albertson more than it can hurt Kroger. So just bringing this all together, this info here about Kroger and then this Albertsons, and they're pursuing this deal here. It's a $24.6 billion merger. As part of this whole thing is Albertson will end up paying a special cash dividends to its shareholders if this happens. I think if you look though at who the shareholders are of Albertsons, you see a lot of this. It's mostly private equity firms. You see Cerberus Capital. You see other private equities. You see there's a bunch of real estate companies that are involved in this. So these equity shareholders that own a lot of Albertsons stock, they're the ones who are going to benefit the lion's share if they're successful in selling off Albertsons to Kroger. So that's who most of the special dividends will go to. Kroger, with this deal, would pay $34.10 per share for each Albertsons share. So Okay, so then you have to say, well, how much is an Albertson share stock trading for? So as of right now, Albertson is trading for $26.21. It's quite a discount. So I think what they're telling us here, we're getting a very clear signal that the market as a whole, they don't think this deal is going to go through. I think it's pretty simple. And when I read through some of these investment reports here, Morningstar has a research note out where they said that they don't think the deal will go through. And I'll quote them here. They say, while we see the merits of Kroger's cash offer to acquire Albertsons for an estimated total of $34.10 per share, we are skeptical that the regulators will approve the deal. So on Kroger's end, and everybody involved here, what they're basically contending is that, well, if they sell, they're talking 300, 400, 350 to 450 of their stores, and they point to the fact that they're a union, they have a union workforce, and basically, they're pro-union, that might help, and they're going to set aside some money to basically lower prices for consumers, that all of these factors together will get things done. But then Morningstar and the market itself is basically saying that they're very skeptical, that they don't think it's going to happen. And I'm pretty skeptical too about this whole thing. I think as an investor at Kroger stock, you have to really look at Kroger as this standalone company, almost as if this Albertson deal isn't going to go through. Um, and they've done okay on their own. I don't own any Kroger. Um, would I buy any? I've always kind of shied away from the supermarket business just because it's kind of notorious at being, it's a low margin, low profit margin type business. Um, I own some of Walmart stock, and they're the largest grocer in the U.S. So I guess I'm invested in that space to some degree, but take a run at a supermarket stock, it's I mean, they're doing okay for themselves, Kroger by themselves, and they see this as a way to leapfrog, their growth and really quicken the growth, which it would. And obviously, I think all the owners of Albertsons sees this as a way to cash out and get their big payday. So I can see why both businesses want this to go through. Um, I guess Kroger, valuation wise, is relatively cheap. The industry they're in, I think they probably deserve to be cheap just because it's the supermarket business. Growth usually isn't gangbusters. Um, I don't know if I would ever buy it. I guess if it got really, really, really cheap, like insanely cheap, maybe I would buy it just as a dividends play only. But and I don't own any now. And again, I tell everybody this is not financial advice. This is just my own opinion here, my own 2 cents. But just my honest opinion on the Kroger Company, and I would say that's the truth on the Kroger Company. Please leave your comments, thoughts, opinions on all this, and thank you for watching.